The CoinDesk Spotlight is brought to you by Nexo, the place to earn on Bitcoin, Ethereum, and more.
All right, Austrian crypto investment platform Bitpanda raising $263 million in a Series C round at a $4.1 billion valuation. Funding will go towards strengthening its team, technology, and international expansion. Joining us now to discuss is Bitpanda CEO Eric Demuth. Hey there, Eric. Welcome to the show. So, Bitpanda was founded as a crypto exchange initially. Since then, it's expanded to offer the trading of stocks, precious metals, and ETFs as well. You've tripled in value in the last 6 months. How did that happen?
Hi, everybody. First of all, thank you for having me again. How did that happen? I mean, if somebody know about this, then you three probably, because you know how the industry works and what's going on. Therefore, I would say the valuation is a combination, of course, of growth, but as well as great fundament internally. So I think we have also achieved quite a lot on the regulatory side in Europe and also building good processes. So I think it's a very healthy growth we have done, although it seems very, very crazy, in such a short time. But as we are talking here, from crypto people to crypto people, I think it's actually not that crazy, I would say.
Well, how much of that has to do with the bull market we've been seeing in the crypto markets right now?
Of course, a lot. The past, let's say the first half year was insane. So it was a lot of firefighting, I think, for all crypto companies around the world. You had to, put all the efforts in every day to stay online and provide a proper service to everybody. Yeah. And now is more time to start building again and continue with your roadmap in a proper manner. But of course, that had a huge impact on signups as well as revenue.
What makes Bitpanda different from other exchanges that are competing in this arena?
So we had a very, very different strategy at the beginning, and we still have. So we are going the full regulated route. We're doing all the headache stuff and trying not to avoid regulation. Instead of going in we talk to every regulator in advance, look for all the license part. We have hired great people from regulators over the years. And this was our strategy from the beginning. So we grew much slower at the beginning than other companies in the industry. But now that strategy really paid off as everywhere across the world, things are getting more, let's say, in the serious manner in the traditional finance world and more regulated.
Eric, welcome back. Let's talk a little bit about your international expansion plans. What markets are you looking at? Where are some of the priorities? Are you looking towards the US? Where do you see the biggest growth coming from?
It's honestly not that international yet. So it is a huge focus still on Europe. And that's going to stay like this for a while because Europe is super hard to conquer. It is not one place you go in. I said it very often. This is why many US companies have a hard time going into Europe. It's not going to Europe. It's going into 20 completely different countries in Europe. And therefore, it's a lot of effort. So this is our USP, and this is what we continue to do, and it's a lot of work. And there's so much more potential because in Europe is very different to the US. People are not much investing in general here. So there is the huge potential.
That's interesting that you say that because recently there's been so much controversy in the US. I don't know if you've been following all the debate about the infrastructure bill. And I think a lot of people in the crypto world think that the US is a really hard market. Actually, similarly to what you say, Europe has all these different countries, but the US has all these different states, right, with completely different rules. I mean, do you think that Europe is actually a harder market to break into than the US?
For a European company going into the US, it's much harder going into the US, I think. But on the other side, it's the same on the, like when you're coming from the US going into Europe, because you really have to talk to 20 different or more regulators here. And that is really a nightmare, I can tell you. And everybody interprets it differently. It's not just one license that covers everything. So I think both markets for each player on each side of the world is very hard to get in. So this is why we're focusing purely on Europe so far.
Just one quick Europe follow-up. Is Europe mostly retail, or are there big institutional investors in Europe as well?
Europe is always lagging behind a bit, and not just on the let's say investing front, but also in general on the tech front. So you always see developments first in the US, and then a few years later, something is similarly happening here in Europe as well. So currently, it is a huge retail market, and I'm very certain that quite soon the infrastructure and the whole license setup and everything will be ready, that institutionals and more professionals enter the market from Europe as well.
Hi, Eric. How are you offering free stock trades? Is it through pay for order flow?
No. We are doing it spread based like everything we have. But it's a very, very small margin here. What we do, for example, to be very transparent, let's say you buy 100 euro of Apple, you would pay right now around a spread of 10 cents. So it's very, very cheap. And we're doing this so everybody can invest, even if you just want to invest 5 euros. And take pretty much the advantage we saw from crypto and bring it to all traditional asset classes. So it's actually opening up the whole financial market to everybody. This is how we do it.
So and then
it's a little spread on every transaction.
Okay. So some of your competitors, of course, are in fact doing pay for order flow. What do you make of people in the U.S. Congress, for instance, who are trying to ban it? Do you think that's something that could happen, that should happen, and do you see it spreading to other countries?
Yeah, it's not the healthiest way, I would say, to do it. And also here, again, that really emphasizes what I just said. Some regulators in Europe say, you cannot do this. You need to guarantee best execution. And some regulators say, like, yeah, it's fine. It's like a gray zone. So there isn't a clear answer. But I think the bigger and bigger the market gets and more retail customers go into investing in general, you will probably see more protection and therefore see more enforcing of best execution. It's my opinion. But I don't know.
When you see FTX and Binance rolling back products like leveraging as well as tokenized stocks, what do you feel? What is your perspective on that in terms of the regulators and this perceived crackdown on some exchanges throughout the world?
That is literally what I meant at the beginning. With we were moving slower at the beginning, but now it really pays off. So to do this fractional stock thing, it took us 2 years to get the license for this, the MiFID II license here in Europe. That's kind of the investment firm license. And really, because it's very new, so you had the regulator had to understand it and find similarities to other things and then build something new together with us. And that was a long journey. And therefore, it's not a big surprise that these things happen, because the classic financial market stocks is completely different, still differently regulated than the crypto market, and therefore, it's much more regulatory work in this area to be innovative than on the crypto market.
So, Eric, speaking of your competitors, we're seeing a lot of questions regarding stablecoins and their role in some of the larger centralized exchanges. Do you have any thoughts on that? Do you think that there should be more regulation from the likes of the U.S. SEC or the Treasury Department or any other regulators in Europe, for instance? Do you think that stablecoins are underregulated?
I don't think stablecoins are a huge threat or a big problem in general. Probably like banks in general, they see it or central banks see it as a threat. Of course, they want the control for it. Therefore, I think if you have proper regulation that is not killing any innovation, is actually a good thing. And that helps to move big players, institutional players, into the system, into the new market, and adopt it. That is very important. So that gives, the legitimacy? I hope that's the right word. And that is super important, but it's a very fine line to kill innovation and actually help establishing it. But for stablecoins, it could actually make sense if it's done in the right manner, and where I'm very, very skeptical because there are different interests on the side of the central banks.